You're not broke, you're just trading wrong. And it's okay, I did the exact same thing when I first started. This strategy that I'm now going to show you is more of a shift in your trading life. It's going to be a lot of small micro changes that you're doing wrong, and I will give you a detailed blueprint about how to change that. Let's get started. The first thing I'm going to tell you is you don't need any strategy. Strategy you see don't work. It's pretty simple. Why do you think Warren Buffett, Ray Dalio, George Soros, Peter Lynch, they don't have a strategy? If they did have a strategy that had a 90% win rate, they'd be making a lot more money than they currently do, and they're already making millions and millions. Why do you think just because someone online told you that this strategy is going to give you an 80% win rate and you can make £10,000 a month, why do you believe them? It's simple. All you have to do is follow instructions, and anyone can follow instructions. And let me tell you why it doesn't work. Because if it did, everyone could do it. And I'm just going to tell you straight up, the reason 95% of people fail at trading isn't because they lack the knowledge or because they gave up too soon. It's because they're doing these strategies, draining their bank account and calling it a scam. It is a scam. It doesn't matter how much you backtest it. You might be backtesting it for 5 years. Oh, it's profitable. Have you done it in the real markets that well? Have you done it at an 80% win rate? It doesn't happen. These trading scams are everywhere. A strategy does not work. What I'm giving you today is not a strategy. It's a way of life to change how you trade, and I'm going to teach you exactly how to do it. I need you to grab a notebook or open up the Notes app on your phone and write this down, because it's going to make you question some of the trades you've placed and the trades you're currently making. Starting off with the time frame. Why are you on a 5-minute time frame? Why are you on a 1-minute time frame or the 15-minute time frame? Can you give me a real reason other than the standard reason of I like to wake up in the morning, sit down, place my trades and be done by 8 o'clock? It doesn't happen. Why do you think everyone's giving you this lovely dream of, oh, by 10 o'clock I'm done trading and I can spend the rest of my day relaxing? It doesn't work like that. Every day I'm spending hours and hours on the charts. Now, it's not just hours sitting on the charts and doing nothing else. I'm going to show you a bit about that later. But these 5 15-minute charts, they're good if you know what you're doing with them. However, I wouldn't recommend them. The only time I'd recommend a short time frame, like the 1, the 5 and the 15 minutes, is when you're learning, so that you can place as many trades as possible on a paper trading account with no risk to your capital. That's the only time I'd recommend doing a 5 and 15-minute chart. Purely because you need to get as many trades in as possible so you learn as quickly as possible. If you're trading on a 1-hour chart, then you won't be able to get as many trades in as you could on a 5-minute. So that's why I tell beginners to use 5 and 15 minutes. And I'll tell them to do it for the first year. After that, when you've found something that works for you, change it to the 1, 2, 4-hour chart. I use the 4-hour chart because when something tells me it's going to happen, 99% of the time it does. Whereas on the 15-minute chart, I could be looking at so much less information that I can't see the backstory of. How am I meant to trust that this one strategy that I copy and pasted and probably didn't backtest actually works? And I'm putting my real money on it. It's ludicrous. It shouldn't be happening. So I'm going to tell you exactly what to do to make sure that doesn't happen anymore and that you can be profitable. So, first of all, change up to a higher time frame. If you change to a 1-hour or 4-hour time frame, that'll make your trades a lot more profitable as is. Purely because the 1 and 4-hour time frame are a lot more respective of support and resistance zones, whereas the 15 and 5-minute time frames are not. They've got micro resistance zones that they break through all the time, whereas a 4-hour time frame, the resistance zones that it has are a lot more concrete than the 5-minute ones. As you can see in the top left corner here, I have a 15-minute, a 1-hour and a 4-hour time frame. Now, I place my trades on the 4-hour. I use the 1-hour to delve deep into it and see what's going on, and I only use the 15-minute when I'm teaching charts, purely because there's more chances of finding something that I can show you and teach you. The ones I only trade with are the 1 and 4-hour, and I only use the 1-hour to see some extra information that can't be shown on the 4-hour. I place all my trades on the 4-hour. My stop loss, my take profit, all of it is done on the 4-hour time frame. And it's not like I'm sitting here for 4 hours, every candle, staring at it, watching it move up and down. It doesn't happen. Once I place my trade, I'm done. The trade might take 5 days, a week, 2 weeks, it might take a month. It doesn't really matter because I can place more than one trade at a time, and I know that that 1 month that the trade is going through, it'll more likely be profitable than if it was on a 15-minute chart and it lasted 3 hours. That's my first change I'm going to give you. Jot it down. Don't use a 5 and 15-minute chart. It just isn't as profitable as the 1 and 4-hour. Start on the 1-hour if you want to, if you don't want as much time in between trades. However, I prefer the 4-hour purely because of the structure it gives me. Now, second one. If you take a look at the right hand side, you can see the charts I trade with. On the red banner, this is what I use to show you what I trade. So this is the public side of things. Whereas if I go over to the blue banner, you can see what charts I actually trade. And there's not many. I have 1, 2, 3, 4 charts I trade. I'll talk you through them in a minute. However, These 4 charts are all I need. I don't need any more. If I had 9 charts, I've now got to keep my eye on 9 different currencies that may or may not work well. I've not backtested those 9 different currencies. I know what works well, and it's these 4 currencies here. Find one currency to start with and spend 3 months on it. Then find a second one, spend another 3 months, and find a third and spend another 3 months. And do that. And now you've got 3 currencies that you can work with, and only get a 4th one when you're profitable with those 3. The 4th one isn't necessary. The only reason I do it is so that sometimes I can get an edge in some markets, whereas some other times I can't. Let me show you. My first market is the Euro USD. I use this for the volatility more than anything. As you can see here, I've currently got a trade that's up £481. I'm risking £100 and my take profit is £800. I'm currently in the middle of this trade. As you can see, I have no indicators on my chart because they're not necessary. The indicators I do use are the smooth moving average on the setting 50, which I spoke about previously, and the RSI. The only reason I have them two is one of them's for confirmation and one of them's to show me, without really looking at the charts, what direction the chart is going at. Now you can see my Euro USD. You can see these 2 lines on it. Now you might be thinking what these lines are, and it's pretty simple. This is where my stop loss was before, and this is where I moved it to. I've now moved it down a tiny bit more to be under £100. That's it. I can get rid of these. The only reason was, my risk was up here to begin with, at negative £400. And as the trade went in my direction, I changed it down to only negative £96. So I'm only risking 1% to gain 8, a 1 to 8 risk to reward ratio. Now that's not what it started out as, but you've got to do that. When you have your trade playing out long term like this, you've got to keep track of your trades and keep moving them down. As you can see here, the price came down, it's now pushed back up a little bit. When the price reverses again and carries on to the downside, I'm going to move my stop loss to just above here, so that if the price rejects and doesn't touch my £800 profit, I'm still closing in profit. Let's move on. My second chart is Euro GBP. Same thing here. I don't have any indicators, I don't have any drawings that I don't need. Everything's done with my eye, and I'm going to show you exactly how to do it. The third chart is GBP USD, and as you can see here, I've recently closed out a trade. That made me about £800 as well. Lastly, I've got the USD JPY. Now I like to have a bit of diversity in my trades, and that's why I've got these 4 different Forex accounts. I don't trade indexes, I don't trade crypto, I don't trade futures, I stick to Forex because that's what I like. And that's what I've gotten used to trading. As you can see here, this trade is currently up £150 with a stop loss of £400 and a take profit of £800 just up here. I only placed this trade earlier yesterday at 10 o'clock in the morning and I'm up £150. This isn't anything crazy, it's purely watching the markets and getting used to them. I'm going to tell you basically everything I know. Because at the end of the day, if you're profitable, that makes me happy because I've already made money. We're still on Euro USD, still on the 4-hour time frame. What are you looking for? When you place your trades, what are you looking for? If the price is in a downtrend, you can only place short positions. And if it's an uptrend, same thing, you can only place long positions. Don't place a short position in an uptrend. It's just going to bite you in the ass. There's no point in doing it. You might get a reversal pattern, but more times than not, it's not going to be profitable. As you can see here, Euro USD is currently in a downtrend. You don't need to look that far back to start confusing yourself. If you look this far back, you can see price was in an uptrend, it's now in a downtrend. Is it going to consolidate? No. You need to look from the last point of exit. The last point of exit is when the price broke the trend and started reversing. I don't want to place any trades close to that break of trend, because that's when price could bite me in the ass and carry on with the trend, or it could bite me in the ass and reverse again. You don't know what's going to happen. So, if you put a trend line on here, you can see price was in an uptrend and broke past. What I've drawn on here is a simple trend line. You don't need much else. But here you can see the price broke out and started the downtrend. Now you might be asking, when do you know it's a downtrend? You can do 100 different things to tell you whether it's an uptrend or a downtrend. I use an SMMA, a smooth moving average. So I've got my length at 50, my source is closed, and my time frame is on the chart. My style, it's simple. It's a red line on the second thickness, complete opacity, just so it's obvious standing out over these. So that's the first thing you're doing wrong. You're adding too many indicators and following all these strategies, so stop doing that. Follow a simple uptrend and downtrend, and that's how you make your money. Don't try catch reversals, only catch continuation trends. That's all you have to do. So get rid of this trend line, because you don't want your chart cluttered. Once you've identified when the trend has turned, that's it. Now it's gone. You don't need it anymore. You know the trend has reversed, and now you're looking for downtrend. Don't look straight away, because that's where it can bite you in the arse. Leave it a while. Now, you may have seen my chart is actually in blue and orange. It's pretty simple. Red and green tells your mind, red, don't go, green, go. You may not realise it, but it might be playing on your subconscious. I've changed the candles to green for bullish and orange for bearish. Let's zoom out again. So now you know you're in a downtrend. What's the next thing you're looking for? You're looking for a trade entry point or a TEP. Once you find your TEP, you enter the trade without hesitation because you know you've done your research and you know that's where you're going to enter your trade. So let's find the TEP right here. Now, looking at the chart, you've got to be realistic about where you'd have entered your trade and what you would have done. If you look at the timing on the chart right now, it's currently 2 o'clock in the morning. I wouldn't have entered the trade at 2 in the morning because I'm asleep. I entered the trade between 8 a.m. and 4 p.m. Let's take a look at those times. Okay, so this is 9 p.m. here. So, this would have been a good entry point here. This engulfing orange candle, which is a bearish candle, would have been a good entry point for my short position. Now, where am I going to put my stop loss? That's the second part of this crucial point. You know what trend you're in, so you're going to follow it. You know your TEP, your trade entry point. Now you want to find your stop loss. Looking for your stop loss, once again on a 4-hour time frame, all you have to do is zoom out. I've now zoomed out the chart. This is what it looks like. Let's put a short order on my TEP and find out where I'm going to put my stop loss. My TEP has been set. So you can see here red and green. Now it's currently a 1-to-1. We need to find out where we're going to put our stop loss. You want to find something which has proven back data. You can see the price is respected more than once. Let's try look for that. There's 2 things that catch my eye. Let me show you. Without placing any markers as of yet, I can see clear as day 2 spots where the price is tested and respected more than once. First one is this section here. This section here is tested it once here, a second time here, third time here, a fourth time here, and 5th time and 6th time here. That there, in my opinion, is a strong support and resistance zone. So you could set it there. Now the second place I put my stop loss would be just above it. Here you can see that it's tested it here, once again here, and a third time here. And every time it's come close to that support zone, this is something else you're looking for, is how strong the candles coming in or out of them are reacting. Let's zoom into the first one. As you can see here, the candle coming up to the support zone is a very strong candle. And then it slowly drips away. Let's do that again. Right here. Price came to test it and a big bearish candle get pushed away. Let's do it this time. It broke through with a big bullish candle. Let's do this one. It came to test it in a big bearish candle. Every time it comes to this lower support zone or resistance, it comes in with some hard and fast candles. Once again here, big bearish. Same thing here, big bearish. Every time it touches it, they're big strong candles. The only time they can break the support zone are with these big strong candles. Same thing with the upper one. Let's take a look at that. Price came up here with a big bullish candle and got rejected with a big bearish candle. Same thing here. Price came up to test it, did break past a little bit and pushed back down with a big bearish candle, all the way down to this lower support and resistance zone. Same thing here. Came tested it with a big bearish candle and rejected off. Let's carry on. As you can see here, it couldn't break through with these small voluminous candles. Even though they were at 2 o'clock in the afternoon, which is both the London Open and the New York Open, it couldn't break it with these candles. The time it broke was with a big bearish candle, and it broke straight through. You want to find these support and resistance zones that push the price away with a lot of force and really quickly. So those are my 2 support and resistance zones. Now, let's zoom back in and find out what we want. If you can see here, all you'd be seeing is this candle at the moment. That's all you'd see on your chart. You wouldn't see what's happening on further down the line. That's not fair. You can't look and go, oh, I would have done that or I could have done that. You've got to be realistic. Where am I going to set my stop loss? Am I going to set it at the lower support and resistance zone or the upper? Once again, look at how the price has reacted. On both of them, they've reacted very strong and very manipulatively. So I'm pretty confident that even on the lower one, it wouldn't be able to pass it. On the upper one, now it's on a downtrend, there's no chance that it would pass. So I'm going to set my stop loss just above the lower one with some room to breathe, just like it has on the previously. If you take a look back here, the price broke through the support and resistance zone, breathed a little bit and came back down. Obviously it broke through later on. However, you need this extra room for your price to breathe before it stops you out. So let's go back to where we're going to place the trade and place the stop loss. Okay, our stop loss is here. Let's place it. Take a look at what's close. Where has there been breathing room before and how far has it gone? Well, it's pretty easy to see. You've got this breathing room here, which isn't much at all. However, if you look closely, you can also see just above it, that's also breathing room that the price could have gone to. Why? Because here on the rejection, this candle came up, it tested it on this candle, and on this one, and on this one, and on this one. It wasn't able to break it in 4 candles. It's a pretty strong grey area that the price doesn't really want to go past. So that's why I set my stop loss, just above there. Now my take profit, I like a 1 to 2 risk to reward. If you like a 1 to 1.5, set it as that. The reason I have a 1 to 2 is because I have more leverage with my money, so that if I lose 2 in a row, I only have to win 1 to get my money back. And if I win 10 and lose 2, I would have still made 18%, rather than a 1 to 1.5 where I wouldn't have made as much. And anything over a 1 to 2 I find to be a bit too risky, as I'm taking quite large trades, which quite large spreads between my stop loss and take profit. So a 1 to 2 I find is the perfect middle ground for a 4-hour chart. Let's set that to a 1 to 2 and see if we've won it. There you go there, the price is currently a 1 to 2.07, basically a 1 to 2. Especially with commissions and spreads, you probably have it closer to 2.7 rather than 2, because a 2 might not be your full 2 times profit because of commissions. Now let's spread it out and see if we made the trade. As you can see here, the price would have hit it perfectly. Now this is what you're looking for in trading. You don't want a perfect straight down, because that's luck. Sometimes you're going to get it, as long as you've checked the data in the past few candles, and checked to make sure you've got the right TEP, and you've checked to make sure the right stop loss is there. Your take profit will come naturally, and that 1 to 2 might change to a 1.8, or a 1.5, or a 3. It depends on you, and depends how you trade. Just find out what you find comfortable and stick with it. Don't keep changing it. I've always stuck to a 1 to 2 ever since I started. That's probably the only thing I've not changed. And I'm telling you, it works perfectly for me, so I can't complain. That's how I do it. Now you're always going to lose trades. You might have a winning streak of 10, 11, 12 trades. Congratulations, well done. Don't get too cocky. Don't start risking more than you can afford, and don't risk more than 4% on a trade. On a trade, I risk 2%. I have a £20,000 account and I risk £400. 2% on a 4-hour chart is not a lot at all. That's how much I find to be comfortable with, and that's how much I find I can easily make. I don't find it too difficult to manage £500 up, £800 up, or even worse, £400 down. I can swallow that, whereas with £800 I don't think I could. And that's 4%, it's still not a lot of money risking on the line. But it's too much risk to be exposing to, and I don't like it. So keep that in mind when you trade. Your psychology matters more than how the trade is going. If you're looking at the trade and it's currently 50% of the way there, and there's a big reversal halfway through your trend, and you're thinking of closing out the trade, close your computer down and leave it for a few days. If you didn't win, I'm afraid to tell you, you were wrong. And if you won, congratulations. But just because you're wrong doesn't mean you're always going to be wrong. And just because you win doesn't mean you're always going to win. Okay, now you know your TEP, where to set your stop loss, where to set your take profit, and how to look for good trades. All you have to do now is spend time in the markets. Learn the markets, how they move, how they react to support and resistance zones, because USD JPY reacts a lot differently to Euro USD, which also reacts a lot differently to GBP USD. That's why I'm telling you to spend 3 months on one specific market, and keep that way. Because if you don't, you're going to start washing out. You're going to start realizing, actually, I'm placing a trade in GBP USD as if it's Euro USD, and I'm expecting it to play out the same way. It won't happen. And USD JPY is 10 times different. If you place a trade thinking it's Euro USD, you're going to fail 99% of the time. So spend time in every chart. Now, which charts you pick are up to you. It's where you live, what time zone you've got, and what time you have to trade. If you've only got 4 hours in the afternoon to trade, so be it. Pick something that has the most volatility in those 4 hours. If you live in the UK, pick something with GBP, because that's your base currency. So you're going to be awake at a better time than most other people to be trading the GBP. Same thing with the euro. If you're living in the UK, the euro is a perfect currency to trade, because you're awake when the euro is awake. If you live in the UK, there's no point trading the Australian dollar against the Japanese yen. Why? Because I'm not awake during the Asian market or the Australian market, and I don't want to be. I don't want to be up at 2 o'clock to trade. I want to wake up at 7:30, have a coffee, have a shower, stroll onto my laptop for about 8:30, watch the markets for a few hours, maybe place a trade, maybe not, and close it down. As soon as I place my trade, my computer is closed for the day. I might place a trade within the first hour, so whoop-de-doo, I can close the laptop and go do something else. Go for a drive, go for a swim, whatever it is. Whereas sometimes I'll be sitting on the markets till 4 o'clock in the afternoon and not a single trade has shown itself. I've still been here checking up on the markets. I've not sat on my laptop for 9 hours, don't get me wrong. I've not looked at the abyss of the markets for 9 hours straight. I've watched some YouTube, I've journaled, I've backtested different ideas, I've looked at different markets, I've tried learning a language. But periodically I look at the chart and say, okay, is that going to be a good entry for me? No? Okay, I'll leave it till the next day. Even if the next day I've missed my entry, it's okay, things happen, you miss your entry, you're getting late, you're getting too early, you get stopped out. These things happen when you're learning. I spoke in the last video about how long it's going to take you to get profitable, and I told you it's going to be 3 years, minimum. If you can't accept that, then stop trading. It's not for you. 3 years in your life. If you're 25 and you're 28 by the time you become profitable, You can retire at 40. Look around. Who can retire at 40 at this day and age? Okay, I've got to interrupt here a little bit. I'm currently editing the video and I proceed to go on about a 15-minute rant about the percentage of how many people make it in trading and business, and I'm challenging the people that call it gambling and things like this. If you want to see that, it's a different episode, but I went on a 15-minute rant about this. It would have been a 35-minute video. So that's everything you need to see on the video. That's all the strategy. That's not really a strategy. That's what that is. So you've learned all that in this video, and I hope it's been some help. So let me skip all that and send you back to the end of the video. But anyway, thanks again for watching this video, and as always, I'll see you tomorrow.